So this oil shock will definitely affect their spending. Now, another problem of rising oil prices is that it makes central banks fear it will push up inflation expectations and a return to kind of 2022 inflation, which lasted longer than some central banks expected. So there's a reluctant pressure to raise interest rates and prevent a return to sustained inflation. But higher interest rates at a time of lower spending and falling investment are exactly the kind of thing that could tip the economy into recession. Personally, I do think it would be a mistake to rush into raising interest rates in response to rising oil prices because, one, it doesn't do anything to directly reduce this kind of inflation, but the biggest threat is going to be an economic slowdown and rising unemployment. But again, we have to ask, if all this is true, why are markets still near record levels? Well, first of all, liquidity still remains quite abundant. There's a large amount of wealth circulating in the financial system. Tax cuts in the US have boosted corporate profits and increased disposable income amongst high earners. And even if many households are struggling, wealthy investors still have a lot of capital to allocate to financial assets. Secondly, some sectors actually benefit from rising oil prices. Oil companies, for example, saw enormous profit during the 2022 energy crisis. The 5 largest oil companies generated around $219 billion in profits that year, roughly double their normal earnings. So whilst higher oil prices hurt consumers, they boost profits for certain companies within the stock market. Also, markets are heavily influenced by expectations about the future. If investors believe the economy will recover quickly, the crisis will be resolved very soon, or that technical innovation will drive long-term growth, the hope of AI, they may continue buying shares despite short-term risks. And the market has got used to the idea that bad things happen, but then President Trump moves on to something else and it's not as bad as first feared. But also maybe shares are still rising because investors just don't like to admit the fact that the past decades of very high growth are moving to an end. We face increased difficulties, which is leading to lower economic growth than in the past. And that means lower earning potential. And these oil shocks and other problems will further impact growth. And what makes the current moment unusual is a combination of risks emerging simultaneously.